Hi guys, welcome to my channel. Today we'll analyze the ETF and the budget together. Today was the budget day, and there was a lot of mayhem as well as volatility in the prices. I especially focus on ETF, so we will go through some of the ETF highlights of today. The US dollar it surged following the nomination of Kevin Walsh as Fed chair. The gold and silver prices went around quite a lot. The US dollar is about to get much stronger. This made investors worldwide panic, sell their safe metals to grab cash, causing a massive global price drop. The STT hike on futures 0.05% and options around 0.15% triggered massive selling. The government just hiked the tax on trading futures and options. It's like a transaction fee that just got a lot higher because it's now more expensive to gamble on where the market goes. The big players started pulling their money out immediately. The silver ETFs were another interesting thing. Silver Bs, silver AG dropped about 12 to 18%, hitting lower circuits due to a blow off top reversal. Silver had a crazy day. It dropped so fast that the stock exchange actually had to hit a pause button to stop the bleeding. After months of prices going up and down, the bubble burst or popped. It was a rough 18% slide. Now, we the things which were on the brighter side, ITBs, IT ETF were rare gainers. They had about 1 to 1.2% due to Safe Harbour threshold hikes, which came in the budget, 300 crores to 2,000 crores. Now, when everything else was falling, tech and IT were actually winning. The government announced a new rule that makes it way easier and cheaper for tech companies to handle their taxes. This gave investors a reason to smile, making IT the cool kid of the stock market today. Now, uh, the PSU and CPSE had a budget disconnect, and basically, the PSU Bank Index it slumped a lot, uh, while the the others didn't. So uh, basically, what happened is uh, government banks, PSUs didn't get the news they wanted. Traders were hoping for some big announcements about banks merging or being sold to private owners, but the budget was quite on that. So disappointed investors sold off their shares, causing these bank ETFs to drop nearly 5%. The realty sector fell 1.5%, likely a sell on news reaction following a lack of new tax incentives for home buyers were not there. So real estate stocks took a small step back. Even though the government is spending a lot on new roads and bridges, they didn't give any new tax breaks to people buying houses. Since there was no bonus news, the hype cooled down and the realty index dipped slightly. The other key highlight was on the health and pharma. These were defensive play. Health and Pharma B showed minimal movement, the ETFs around that 0 to 0.2% acting as a classic defensive hedge. When the market gets scary, people run to healthcare and pharma instead of FMCG these days. The government promised 10,000 crores to help India make new medicines because people always need medicine regardless of the economy. These stocks stayed steady while everything else was crashing. The auto Bs fell 0.86%, almost 1%. Despite strong EV sales, the budget lacked broad scrappage scheme expansions. The auto industry had a boring day. Investors were hoping for a big plan to help people trade in their old gas cars for new ones, but it didn't happen. Even though the government is building more highways, car stocks stayed pretty flat because the big spark for EV sales was missing. Another highlight was the small cap. While it fell 2.1%, rising US yields and strong dollar prompted FPIs to exit riskier small cap bets. But if people are looking at longer side, this may be one of the hits. Uh, because interest rates in the US are going up, big global investors are deciding to take their money out of risky small Indian companies and move it back to safe, bigger ones. It's a classic move. When things get shaky, the small guys feel it first. People were also rushing to liquidity. Now, liquidity volumes have really surged. So basically, everyone is selling and the cash is moving to liquid ETFs significantly. Now, let's have a quick look at the ETFs as in lost, I mean, the losers who were there in the last 30 days. And we see realty sector right at top, almost 11.5% it has decreased in the last 30 days. There's also FMCG uh, on the consumer side, Autobees, and then Motilal Oswal small cap fund. These are all in the bottommost ETFs. The HDFC small cap 250, the infra ETF by ICICI Prudential, the small 250 Nifty Small Cap 250 ETF and Nifty Healthcare ETF, as well as other small cap and pharma were in the other top 10 losers in the last 30 days.